Hi, welcome to the Market Alert for Monday, 16th of September 2019. So a lot has gone on over the weekend, which we'll get to in just a moment. But Friday, we saw the market soar to record highs, or near, as it states here. We didn't quite get there. And things look a bit different this morning. As I say, we'll look at in just a moment. And the bond bloodbath, which means that bond prices dropped, yields have risen, and the momentum stocks continue to move lower. So let's have a look at the Dow to start with. And in the main event, the market did absolutely nothing except trade in 76% retracements either side of the 200 bar moving average. There you can see this. So a very quiet day. It was a predictable one after a while, because the market would trade to either 76% or to the recent high and created a channel. But prior to this, if you have a look here, just drag the chart over, from 8 a.m. the market did its usual thing, traded through the 200 bar moving average, and the futures market just moved to the upside until about an hour before, and then we see prices starting to move back to the downside there, and then become sideways. Very unusual for this on Friday. It looks like they were doing their best to try and hold the market and support it, and then eventually, as you can see here, the market banging its head against the 200 bar moving average, and eventually failing here to move higher, and then prices trading sideways to the end of the session. Now the gap down, if you've not already heard, is a result of this. Oil prices have soared after attacks on Saudi facilities, and allegedly, there's no confirmation of this at the moment, that it is Iran which has sent the price of oil moving to the upside there. You can see the headline, oil explodes 20% higher, biggest jump on record. We'll put some perspective in this at the moment. I think there's an ulterior motive here personally, false flag, or whatever you want to call it, but they've been looking for a war, in particular Israel looking for a war with Iran for a long time, and Trump has already come out and said we're ready to go. So here we go again. So the Dow has gapped lower. We found some support. The market has double tested here, and again we've got some volume, and then we've got a 76% retracement, and the market starting to move higher. As we took off from here, the market pulled back. We had 76%, and we traded down to this double bottom here. So prices at the moment trying to make their way up towards the 200 bar moving average, which you'll see just appearing here, and to see whether these prices fill the gap, which is what we'll be looking for here. You can see there's your gap. So the 200 bar moving average has got to be taken out in order to fill the gap, where most times the market will fill the gap. Today there is no news, but as we go further through the week, the news starts to get a bit tastier. Just one second, let me bring this up for you. So there's nothing today. So the market's going to use the 20% increase in oil to move prices, and then nothing tomorrow. Well, Wednesday is the big day, the big news item for this week. And it looks like we've got a rate cut forecast for the US from 2.25 down to 2 there. So keep that one in mind. Otherwise, the market's going to make its own decisions, and I wouldn't be at all surprised if we don't see prices heading back up towards the all-time highs as IG heads to reducing interest rates on Wednesday there. So let's see how this pans out. You can see the market's gap there, but I wouldn't be at all surprised by Thursday's alert to see the market having taken out the all-time high. That's what they want, and they're going to do their best to do this. Meanwhile, back in the UK with the pound, this moving higher on Friday as prospects of no Brexit, never mind no deal, continues in my opinion. And I would again expect the pound to continue to move stronger. There's a court case tomorrow about Johnson prorogue in Parliament, whether it was legal or not. Bizarre. First time ever I've seen the law involved in some decision that the Queen went along with. But hey ho, we live in strange times with regards to all of this. And the pound, you can see there, up strongly on Friday, off a bit at the moment as the dollar is higher. Just go back to crude oil, get some perspective here. This is the monthly chart of crude oil. And you can see down in 2008, we had $150 per barrel. This is where we are currently. Now, if this progresses, or the situation progresses and crude oil trades up, it's going to be bad news for consumers, really bad news. As petrol prices are already at a similar price to what they were in 2008 when we were at $150 a barrel, and we're $100 away from this price, or $90 away from this price at the moment. So you'll be paying an absolute fortune for fuel. The only people that would be happy about this are central bankers, because they're getting the inflation they want to inflate away some of the debt that they printed during the last 10 years. So keep an eye on this, but also maintain a perspective. If we come down to an hourly chart, you can see how prices have gapped up. But as I always say, step back, look at the bigger picture, and you see it's not that big of a deal, even though you've got the sensationalism of the media, whether it's the BBC, Zero Hedge, or wherever at the moment, just adding to the mix there. But again, always do your own research, step back, have a look, and get some sort of perspective on the events. Bitcoin, not doing a lot, stuck in sideways range at the moment. Apologies for the voice as well. Something's gripping me at the moment. Hopefully it'll clear shortly. But Bitcoin, you can see, has been very narrow over the last couple of days, and banging its head against the 50-bar moving average there, which needs to be taken out. And it's in between the 20-bar as well, so coiling a bit there. So it's gone very tight, so be careful at the moment of this range. And again, you can see this in the 4-hour chart. However, note the market is above the 200-bar moving average at the moment, which is good news. So there is the prospect of it sort of breaking out to the upside there. And then just finally to finish off with the implied volatilities and the yields, which I completely forgot about in Fridays. Here you can see that the bloodbath in the bond market, you see prices or the yields moving lower, back to more normal levels, and the bond prices, which are inversely related, will be moving to the downside. I'll see if I can put something together to show you that relationship. But if bond prices go up, yields go down, and vice versa. If interest rates go up, bond prices go down and yields go up as well. Or if interest rates go down, bond prices go up as well. If you understand those relationships, it makes it a lot easier to trade any sort of financials as well. In the implied volatility, we can see that this has pulled back hugely. I would expect this to increase over the next few days, given what's going on in the oil market, and if that, as I say, does escalate or progresses towards any sort of warfare, then you can expect this to take off. And I would expect it to move higher today, or by the end of today as well, if there's any uncertainty created. So 1189 on Friday, 1165 on Friday, but we are down into these levels where we could see some activity, but not until after Wednesday, when the Fed either increases or they keep rates on hold. We'll soon see if Powell is taking any notice of Trump on Wednesday, and God help him if he doesn't adhere to what Trump wants. It'll be interesting to see how he's going to play that one. Interesting times indeed. Now you can see we're all green on the implied volatility at the moment, so even given the situation with the increase in oil, we're still hanging around and looking to get to the all-time highs as far as the Dow is concerned. Okay, that will do it for this one. And yeah, let's see what happens today. Thanks for watching. See you in the next one.